And with respect to the question on monetary policy, what I can say is that Ghana has made good progress since the beginning of the program in reducing inflation. Inflation was extremely high at the end of 2022 at 54%. It has now come down substantially to 14%.
What we have here now, I say items. No, first one, a 2 kg bag of rice. That
25
is
kg.
25 kg bag.
Following the rebasing exercise and the revision done to previously released estimates, I can now report that in 2019, which is the new base year, replacing the old base year of 2010. In nominal terms, Nigeria's economy was estimated at 205.09 trillion naira. That was as at 2019.
Thank you guys for tuning in and welcome once again to another episode right here on Civic Inspirations. Guys, we are back with another interesting, juicy, very educative and expository videos. Yes guys, disclaimer first off, this video are for educational and expository purpose, right? Not to demean, demote, demarket any country, any citizen, but just saying it the way it is, raw and undiluted. And for today, guys, it is breaking for Ghana. Yes, just according to the title that the United Nations, not just the United Nations, the IMF and a lot of organizations, financial organizations in particular, that has been interested in the economy, GDP of the motherland Ghana, as well as so many other countries in the continent of Africa, has come up with a lot of conspiracies, seeing that the motherland Ghana is actually doing fantastic. Guys, I'm super duper excited to be doing this because, guys, it's giving me so much goosebumps seeing that the economy of Ghana is stabilizing, as well as the prices of goods and services, commodities dropping down. And we're going to see that in this video. Yes, why would they rate Ghana or the leaders or the president, his imperator Johndramanimahama, as the best performing president leader in the continent, not just in the continent, in the world? Guys, you're gonna see every reason and details why the country and the president for Ghana is trending, so stay glued. As well, on the other hand, of course, Nigeria is not left out. We're gonna see what is really going on in the economy growth and the GDP of Nigeria as well. Why Ghana is thriving, Nigeria is actually, struggling really hard to survive, to breathe in the drowning ocean of what debts upon debt. Guys, everything is broken down in detail, so I sure bet you don't want to miss out on any clip. Watch patiently to the end, but most importantly, like, share, so that your enemies, your haters can see. And stay subscribed. If this is your first time here, don't make it your last. You don't want to miss out on this kind of juicy episode. And with all this being said, no further ado, let's quickly delve into these videos and I'll come back to react further.
Reported that the International Monetary Fund, IMF, had warned the Bank of Ghana to stop intervening in the forex market. At the time, Ghana's central bank was using foreign reserves to stabilize the cedi. The IMF said no, let the cedi float. But now, the message has changed again. Today, IMF is back again, and this time, they are advising Ghana to keep interest rates high. Yes, even after 6 straight months of falling inflation, even after the policy rate has sat at a painful 28% for over a year.
And with respect to the question on monetary policy, what I can say is that Ghana has made good progress since the beginning of the program in reducing inflation. Inflation was extremely high at the end of 2022 at 54%. It has now come down substantially to 14% at end June 2025. Going forward, it will be important for monetary policy to remain sufficiently tight.
So what's really going on? Let's break it down. Inflation in Ghana hit a record-breaking 54.1% in December 2022. It was the highest in over 2 decades, fueled by collapsing cedi, food shortages, and global shocks. But since then, things have been improved. By December 2024, inflation had fallen to 23.8%. By March 2025, 17.3%. And by June 2025, 13.7%. That's a total drop of over 40% points in just 18 months. And it's not just headline inflation either. Core inflation, stripping out volatile items like fuel and food, has also trended downward, dropping from 49.2% in early 2023 to under 15% today, according to the Bank of Ghana. Yet, despite these positive numbers, the central bank's benchmark interest interest rates remain fixed at 28.0%, one of the highest policy rates in Africa, second to countries like Zimbabwe. So why isn't the IMF cheering louder? According to Julie Kozak, Director of Communications at the IMF, going forward, it will be important for monetary policy to remain significantly tight to bring inflation down to the Bank of Ghana's target range of 8%, plus or minus 2 percentage points.
Coming back to the press center, I have a question that has come in on Ghana from Emmanuel Ahabin from EIB Network, and I'll go ahead and read it. It says, Ghana's finance minister is presenting the mid-year budget today, following a first half marked by notable improvements in key economic indicators. However, concerns are rising about potential new fiscal slippages that could undermine gains in inflation control, currency stability, and overall recovery. Does the IMF share these concerns? And second question, what is your view on the role of monetary policy at this point, especially as the Bank of Ghana prepares to review its policy stance? So let me go ahead and take this question. Again, stepping back, on July 7th, the IMF's executive board completed the fourth review of Ghana's ECF arrangement. And after board approval, Ghana received about $367 million US, bringing total support to around $2.3 billion US since May 2023. With respect to the budget, here I can say that the IMF has welcomed the government's corrective actions, including a strong 2025 budget and an audit of payables to quantify and address the pre-election fiscal slippages. The authorities have recently implemented changes to their public financial management and public procurement acts, and this helps improve the overall fiscal responsibility framework in Ghana. And the authorities have also adopted a strategy to address issues in the energy sector. I can add that the mid-year budget review is fully in line with parameters and objectives of the IMF supported program. And with respect to the question on monetary policy, what I can say is that Ghana has made good progress since the beginning of the program in reducing inflation. Inflation was extremely high at the end of 2022 at 54%. It has now come down substantially to 14% at end June 2025. Going forward, it will be important for monetary policy to remain sufficiently tight, consistent with bringing inflation down to the Bank of Ghana's target range, which is 8%.
That means the real target is somewhere between 6 and 10% inflation. Right now, Ghana is still at 13.7%, which is outside that range. In other words, the IMF believes Ghana is close, but not there yet, and they want the Bank of Ghana to hold the line until inflation reaches single digits and stay there. But many local economists disagree with the IMF, and here's why. Lending rates in Ghana now average 34% to 38% for businesses. Small and medium enterprises, the backbone of the country's economy, are finding it nearly impossible to access affordable credit. Meanwhile, other countries with similar inflation levels are already cutting rates. Countries like South Africa has 5.4% inflation with 8.25% policy rate. Kenya, 6.9% inflation with 13% policy rate. And Ghana, 13.7% inflation, still has 28% policy rate. So the question many people are asking is simple. Has Ghana done enough to start easing? This debate comes at a critical time. Ghana's Monetary Policy Committee is holding its 125th meeting this week. This committee will examine key macroeconomic indicators, which are 1. The cedi, which has remained relatively stable, hovering around 10 cedis 50 pesos to the dollar in July 2025. Foreign reserves now at $5.2 billion, enough to cover around 2.7 months of imports. Domestic revenue, which has improved under the IMF program, up 19% year on year according to the Ministry of Finance. And yet, the Bank of Ghana is cutting between two tough options. 1. Cut rates too early and risk inflation bouncing back, or hold rates too long and choke off investment and job creation. Here's where things get complicated. Just weeks ago, the IMF told Ghana, stop intervening in the forest market. Now they are saying don't cut interest rates either. Too many observers are saying this feels like a contradiction. On one hand, don't defend the currency. On the other hand, don't stimulate the economy either. And the reality is, Ghana is still locked into a $3 billion extended credit facility. That means the country must follow certain benchmarks to continue receiving disbursements. So, whether the central bank agrees with the IMF or not, it may not have much room to maneuver. To sum it all up, inflation is falling, but still too high for comfort. Interest rates remains the second highest on the African continent. The IMF says stay tight until inflation hits its target. So here is a big question. Will the Bank of Ghana hold firm or give in the call for a rate cut? We will find out very soon. And that is all for today's.
Minuka say no, NDC4 score big. They are winning on every major issue. And Ghana for said this is the change they voted for. Minuka say no, goods and services least be about Tuja. And as you can see, we if Ghana web, more patches say, Omuko Chrome could be prices before prices now. And can question things are really going on. What mean about what is really going on? We are not bolus, no what church. I
mean the kind bolus so Emma Ghana for who what we have here. Now I say items, first one 2 kg bag of rice. That
25 kg.
25 kg bag of Royal Aroma rice to be specific. Old price 650 Ghana cedis.
25 kilo na
Kesiano.
Back a CPA.
But Kesiano, I think say you want a Kesia pan so no see 50 kg so honum. And you want a Kesia pa.
You 25 you 50 kg.
And also so pa.
The Dinian say
and on the old price no say 650 Ghana cedis, but new price no I 356. That is almost half of whatever it was before no. And a long cut of sugar. Initially na 50 Ghana cedis, but Kesiano 44 Ghana cedis. I save 6 Ghana cedis. And 25 liters of cooking oil gallon no. Now and can no 980 cedis. See about 640 cedis now.
Wow.
Where there may show some money and any be na any budget because me wadam for be or some time ago I call market no. Now you reducing oil now by 900 cedis.
900 cedis.
Should be told when ohun say about 900 cedis of course sika or the course okwa kodi dwan wan di dwan be mu otobe bre no na be because there be edu baby na kwa na ekosoro eno nti onu nso hu say obehia no na che say aba form kakra no e no take advantage no otobe bre di kogu ho no nti say na aba form more
aba form 640 cedis.
Yeah, more.
That is huge.
Yeah, very very huge.
The difference like almost 340 cedis.
And I contain so one sack. I mean, him say go contain one sack. One sack no say first na 1,200.
And the Ghana for the contain power.
I'm even surprised. Say I no say 950 cedis. And a ton of iron rods. I mean, sure say almost see down no. We see we man bi or baby. This will be good news for you. A ton of iron rods in Canada 9,400 Ghana cedis. Say I reduce about 7,500 cedis, which
means almost 2,000 cedis if you so.
Exactly. And also at least to me the year BB.
That if you are for multi so.
If you are for so then you don't save dan no me say nya fe no mo sangoto
so mo ka cement bo koso be we see dan ni
we no dey asem kan kaka wo so be ye bia wo be ye fe ani e be say o be to dey so na say alright yan koso na onion ye say am pem jene dey bibia ye dey in terms of cooking no one paint bucket no initially no na 120 Ghana cedis say no about 95 Ghana cedis na Ghana for purchase we no a huge reduction na abba. But it is coming not from our Ghanaians, as in omo market or more field so no. We estimation abeto ye name from the top. Whether we are experiencing that or not, no major my for now who sha. Do you think said there has been any reduction in the prices of goods? Say bibi sa fato comment section ni mu my old price no my new price no. Na the ayanso ye the amount no say correct na no so why you then why my who say ampa this is what is actually going on in the market because information be ho no ma yenya we need verification to be able to tell say no cre and say enya no cre. So that is it when it comes to the reduction of goods APM from the mid-year budget review na say eba ye no.
Economy, with nominal GDP now standing at 238.4 trillion naira in fourth quarter of 2025. This rebasing has reset the size of Nigerian economy, with nominal GDP now standing at 238.4 trillion naira in fourth quarter of 2025. A more accurate picture of Nigeria's current economic position. The current rebasing covers the period from 2019 to 2023, using 2019 as a new base year. According to NBS boss, while briefing the press, he says the new figure represents a 41.7% increase compared to the previous rebasing exercise conducted in 2014.
To the results. Following the rebasing exercise and the revision done to previously released estimates, I can now report that in 2019, which is the new base year, replacing the old base year of 2010. In nominal terms, Nigeria's economy was estimated at 205.09 trillion naira. That was as at 2019. This represents 41.7% increase over the previous nominal GDP of 2019 using the old base year. You can see that a substantive improvement has been done between the old GDP and the new rebased GDP.
Meanwhile, Nigeria's gross domestic product also expanded by 3.13% in real terms year-on-year in the first quarter of 2025. The NBS says the growth marks a modest rebound from 2.98% recorded in the fourth quarter of 2024, although slightly lower when compared to the 3.61% posted in the corresponding quarter of 2024.
The GDP grew by 3.13% year-on-year in real terms in the first quarter of 2025. This growth rate is higher than the 2.27% recorded in the first quarter of 2024, following the benchmarking of the estimate. The performance of the GDP in Q1 of 2025 was driven mainly by the service sector, which recorded a growth rate of 4.33% and contributed 57.5% to the aggregate GDP.
But beyond the numbers lies the question: how does Nigeria turn this statistical growth into real investment and job creation? Frank Omalape, Arise News.
Well, thank you, Frank, for an in-depth analysis on the latest GDP figures released by the Nigeria Bureau of Statistics. We're now being joined by Adetilewa Adebajo. He's the Chief Executive Officer of CFG Advisory. Thank you so much, Mr. Adebajo, for joining us on the news tonight.
Thank you. Good evening.
Great. I think a good place to start would be to break it down for average Nigerians who are watching tonight. The NBS says it has rebased the economy. It grew over by 40%. For the average Nigerian watching tonight, what does this mean? And does it change their lived reality?
Thank you very much. Well, I think it's quite interesting as to what those statistics are. And I think the pronouncements actually were a bit confusing because what the statistician general told us then was that he was looking at 2019 figures, and based upon Nigerian GDP figures for 2019 figures, they're looking at a GDP of 205 trillion, which is just about $138 billion. But haven't looked at the numbers, and I think what he said is that currently our GDP for 2024 is 314 trillion naira. If you take a look at that in terms of dollars, you're looking at about 243 billion US dollars. But having said that, I think there's really not much significance in terms of the estimates that we have seen, because even with all the rebased numbers, it is quite clear that Nigeria's position as the fifth largest economy in Africa hasn't really shifted that much. Nigeria has lost its dominance as the largest economy in Africa. And what is also quite important for us is the fact that growth numbers are still not optimal. Last year, GDP growth in the fourth quarter was 3.8%. It's down to 3.1% in this first quarter. And if you take a look at my charts, as you've seen, which came from the World Bank, you'd see Nigeria's GDP numbers in blue at the bottom. So if you take a look at Nigeria's GDP, we were close to like 550, close to 600 billion GDP at a point in time. And we've dropped significantly, and in terms of our GDP is down to about 200 and 240 billion now. So I think it's safe to estimate that our GDP at 200 billion, we've lost close to nearly 400 billion of our GDP in the last 12 years. That is pretty significant. And if you take a look at the line in red, that line in red is what you call the $1 trillion economy. You can see Indonesia, in its case, has crossed that line. But if Nigeria wanted to achieve a $1 trillion economy by 2030, then our economy needs to be growing 5 times faster than what we're currently growing at now. So, and for a population of 200 million people, our GDP capita has dropped to about close to $804 from a high of about $3,200 about 10 years ago. And you now find ourselves in a situation whereby 5 times growth we need at our current rate is clearly this GDP growth is not optimal for 200 million Nigerians. That's the reality we face.
Great. Thank you for breaking that down, Mr. Adebajo. In other words, this rebasing didn't do any good at all. So one wonders why it was done in the first instance. But let me ask you, if the government wants to hit that $1 trillion economy, as you have highlighted, what do we need to be doing to hit that 5 times faster rate? We look at the sectors that was listed by the Statistician General. The 5 performing sectors are crop production, trade, real estate, telecommunication, oil and gas. Any surprises there? Trade, real estate, telecommunication, oil and gas. Any surprises there?
Okay, thank you very much. As you've said, it's not about rebasing. And rebasing, these numbers are not surprising. Rebasing is a statistical exercise which you go through, and it's not done to boost GDP because the reality is what we face. And let us take a look at the status of the Nigerian economy half year 2025. We have actually achieved a significant amount of economic stability. I think there's a consensus on that. There's also a consensus on the fact that the trajectory on inflation is going downwards. The number the NBS puts out is in doubt, but I think with the MPC meetings that are coming up this couple of days, if the MPC has enough faith or confidence in those numbers to be able to cut rates, then I think the proof is in the pudding of that will validate those numbers from the MBS. But having said that, reforms and economic stability are very important, but they're not enough by themselves to be able to grow your economy. Nigeria's economy needs a growth rate of at least 8 to 10% on a sustainable basis to lift most Nigerians out of poverty and to restore purchasing power. One of the challenges of the Nigerian economy today is that we've lost purchasing power. The monetary policy over the last 2 years has been focused on reducing inflation to enable us to restore parity and purchasing power. So that is why you've seen significant amounts of high interest rates and you're beginning to see tightening and to be able to see what the issues are. But one of the challenges with inflation is the fact that the FAC allocations to the subnationals, the government, has gone up from about 7 trillion to almost 14 trillion in less than a year. And right now, last month, there was a significant outflow of about 1.8 trillion just for FAC money that's coming out of the system. So this is the challenge. Because of this money coming out, it is causing problems of slowing down inflation. So what is important now is that government needs to build on the economic stability we've seen. And you need to put together policies that will stimulate growth, which is your structural reforms. And more importantly, where is the industrial policy? Where is the trade policy in the light of the Trump tariffs? And more or less, what is the investment policy doing? And these 3 policies don't work by themselves. They need to be synchronized with both monetary policy and fiscal policy.
What I find interesting is to look at these sectors. When I see real estate coming in 3rd, oil and gas coming in 5th, telecoms coming in 4th, crop production as 1st, it does sound interesting. Perhaps diversification is here to stay. But let me ask you, the GDP is bigger, yes, but so is our debt. Revenue to debt servicing is now at about 68% at the last check, almost hitting the 70% mark. Does this rebasing improve our fiscal outlook in any way? And does it give room for the government to borrow more? What do you think?
Thank you very much. I think there's no correlation between the rebasing of GDP and the fiscal issues. I think the reduction in the debt.
All right. Oshe baddest. It's been a while I gave you guys this juicy slogan. In case you're new here, when I say Oshe, you say what? Baddest. We are doing the great things, like the motherland is shaking the world. Ghana is trending and trending for the right reasons, guys. Did you see when the prices of commodities were being broken down, how it is dropped drastically? Can you beat that? No, you didn't see it coming. Can you beat that? Can you beat that? How much the economy has really done well for itself and the citizens. Give a round of applause for this country called Ghana. For the country called Ghana. See, that's why Ghana is being envied by so many people, not just African countries as Nigerians. So, especially the IMF, the Western European British countries. Well, tell me why they will not be jealous. Tell me why they will not be trying to, manipulate, trying to checkmate, trying to understand what's going on. But in a bit, we've seen how Ghana has been managing its mineral resources, owning it and utilizing it to the highest level. A round of applause for the motherland, Ghana. All right, see, I'm really all hyped because at this point, I feel very excited. Then on the other hand, I think we should be able to see the there are a lot of factors that has really boosted Ghana's economy. On the other hand, looking at what Nigeria has really come up with, we have seen in details, well broken and explained, what Nigeria needs to do and why we are where we are, ranked with how many millions, yes, still wallowing and draining in debt. This is to tell you that we need to go back to the drawing board as Nigerians, look at what others are doing and getting right, then go back to the drawing board and correct a lot of things because we've abandoned agriculture, most importantly. And when you look at, aside oil and gas, look at Ghana's cocoa is booming. Look at Ghana's gold, which is also a mineral resources, is booming, and the oil and gas as well. In fact, when it comes to agriculture, Ghana is very high on that. Like, they are keen on that. That is what Nigeria should be up and about. But there's a lot to do with that because insecurity and a lot of losses has really affected the agricultural sector of Nigeria, and debts like borrowing from IMF and all these financial institutions have really plunged Nigeria into debt. Just yesterday, guys, if the WAFCON arrived, and if you need to know how much, congratulations to them, by the way, but you need to know how much the president promised to these people, pledged to them 150 million naira in naira, which is $100,000. But yet electricity is in shambles when it comes to electricity. When it comes to other sectors that finance of Nigeria is supposed to be servicing, they are actually not doing so, which is misplaced priority for me. So it's high time our government, our leaders, our financial institutions, and every sector need to sit up to manage the economy of Nigeria, because where we are today, forget about what they wrote on the car, enter the car, because what you will see inside the car, the heat. Anyways, guys, this is my own opinion. I don't know about you. Let me know your thoughts, your comment based on everything we've heard here for Nigeria and Ghana, and let's talk, let's share. Like this video, share, and stay subscribed. I really love videos like this because it helps us understand what we as countries are up and about, especially the motherland. Once again, congratulations to Ghana. Ghana is doing well, as well as other African countries. Like, yourself, rep yourself according to your country's flag in the comments, right? Like, share, and stay subscribed, and let's talk in the comments. I'll see you in my next one. Ciao, ciao.